Hi, I'm Karen Jones from Altitude Home Loans, and I'm a certified mortgage loan advisor. And thank you so much for wanting to learn more about the reverse mortgage. This program is for our seniors that are 62 years of age or older. And believe it or not, there's a lot of myths out there that just are not true. So, this recorded webinar is going to provide you with specific information to help you make a decision if you should explore it further for your own financial situation or not. And if you would like to get more information, my team and I would be happy to help. So thank you so much for watching. I'll be there on the other side. Bye for now. Are you wondering whether a reverse mortgage can help you in retirement? You're not alone. There's a lot of information out there, and honestly, not all of it is clear. My goal here is simple: to help you understand how a reverse mortgage really works, what it can do, and just as importantly, what it doesn't do. Because this isn't about selling you something, it's about helping you make a confident, informed decision based on what's right for your life. Hi, my name is Karen Jones, and I'm a certified mortgage loan advisor. And I've been helping families navigate financial decisions for over 40 years. My approach has always been simple: educate first, strategy second, and then you decide. Because when you truly understand your options, you can make confident decisions that are right for you. And that's exactly what I want to help you do here today. At its core, a reverse mortgage is simply a way to turn a portion of your home equity into usable funds. And here's the part most people don't realize: you are still the homeowner. Your name stays on title. And as long as you meet a few basic responsibilities like paying taxes and insurance, you stay in control of your home. Now let's talk about how you can access the equity in your home using a reverse mortgage, because this is where the flexibility really comes in. For most people, being debt-free isn't just a goal, it's something they've worked their entire life to achieve. So it's completely normal for this to feel a little confusing, like, why would I go back into debt? But there is a different way to look at it. Your home is an asset, and the equity you've built over time is something that can be used to support you during your retirement years. And that's where these options come in. You can obtain a lump sum, a line of credit that can grow over time. You can receive monthly payments, which, by the way, are non-taxable, or even a lifetime payment schedule. Understanding your options allows you to make financial decisions to best suit your financial goals. What happens if one spouse is under 62 years of age? And the good news is the reverse mortgage program does support this. When set up correctly, the younger spouse can be designated as a non-borrowing spouse. If the borrowing spouse passes, the non-borrowing spouse is protected. If they choose to remain in the home as their primary residence, they most definitely can. They will be required to meet the basic requirements of the loan, which is simply maintaining the home, paying those property taxes, insurance, and any HOA dues that are due on the home. So having a younger spouse does not disqualify you. It just means the loan needs to be structured properly from the very beginning. And that's where guidance really becomes important. Before we go any further, I want to take a moment and acknowledge something. These are some of the most common myths people hear when it comes to reverse mortgages. And if you heard any of these, you're not alone, because most people have. So let's walk through them together and separate what's true from what's not. Let's start with probably the most common concern. The bank takes your home. I hear this all the time, but the reality is that's not how this works. You remain the homeowner. Your name stays on title just like it is today. The reverse mortgage is simply a loan against the home, similar to any other mortgage. The difference is, instead of making a monthly mortgage payment, the balance is deferred. Now, there are still responsibilities like I discussed earlier. You do need to live in the home as your primary residence, keep your property taxes current, maintain your homeowner's insurance, pay any HOA dues if you have them, and maintain the home itself. Another myth is it's only for people in trouble. And I really do understand where that comes from. In the past, this program may have been used more often as a last resort, but that's not how it's being used today. Today, many financially stable homeowners are using this as part of a broader financial strategy. So, this isn't about being in a difficult situation anymore. It's about having options and using resources wisely. And another thing that surprises people, this program is not driven by a specific credit score like a traditional mortgage. It's really all about your overall financial picture and your ability to comfortably stay in your home. And that's why it can be used as a financial tool during your retirement years. Let's take a moment to address one of the most common concerns. It's too expensive. And I want to acknowledge that right away because it's a very valid concern. Mortgages are expensive in today's economic landscape, and reverse mortgages have costs just like any other mortgage. But often, these costs are looked at in isolation without considering the full picture. For example, there is no required monthly mortgage payment with a reverse mortgage. So when we look at cost, we also want to look at what it may be doing for your monthly cash flow. You may also want to look at how long it will take to recoup those costs. Considering how it may help preserve other retirement assets, especially during times when markets are not performing well, is another area that should be considered. So rather than asking, what does it cost? A better question becomes, what is this reverse mortgage doing for my overall financial situation? Is it creating more monthly flexibility? Is it helping preserve other assets? Is it giving you control over your cash flow or providing excess cash for future travel needs or home expenses? Because when you look at it that way, it's not just a cost, it's a strategy and one that's best evaluated over the long term. There are a few basic requirements to qualify, but for most people, they're very straightforward. The biggest thing to understand is that the home needs to be your primary residence, and the reverse mortgage becomes the only loan on the property. So, if you are considering a reverse mortgage, let's talk about your specific situation together so you can get a clearer understanding of what's available to you. There are really two primary ways a reverse mortgage can be used. The first is for the homeowner who wants to stay right where they are and use the equity in their current home to improve their financial flexibility. This is called a reverse mortgage refinance. The second is for those who may be looking to make a move, whether that's downsizing, relocating, or finding a home that better fits their lifestyle. Instead of selling the home and paying for the new home in cash, they can use a reverse mortgage as a part of the purchase. So, depending upon your goals, this can be structured to support how you want to live, not the other way around. We already spoke how the fees are a real concern for candidates wanting to explore the reverse mortgage. And yes, reverse mortgages do have costs, just like any other mortgage. But one important difference is that the reverse mortgage is an FHA government insured program, and this mortgage has built in consumer protections. That's actually why FHA became involved, to help ensure that the program is structured to protect homeowners. Do you remember the challenges with reverse mortgages that caused many of the myths that exist today? With FHA, the consumer is now protected so that those earlier challenges no longer exist. Another benefit of the reverse mortgage is that the costs, in most cases, are not out of pocket expenses. In many cases, these costs can be built into the loan. FHA established these protections to address many of the concerns that people had in the past. including making sure eligible spouses are protected and able to remain in the home as their primary residence. The reverse mortgage is a non-recourse loan that protects the borrower in the event that the value of their home decreases. And the agreement that you initially obtained at the origination of your reverse mortgage stays intact as long as you live in the home as your primary residence. So if the value of your home decreases, you still maintain access to the terms of your reverse mortgage that you initially set up. This is a huge protection benefit for our retired borrowers. Now let's talk about what this means for you and your family, your heirs. This is another area where there's often confusion. But the reality is your home just doesn't disappear. When the loan eventually comes due, your family has options. They can sell the home and keep any remaining equity, or keep the home in the family by refinancing it to a traditional mortgage. And because this is a non-recourse loan, they're never responsible for more than the home is worth. So it really does come down to that flexibility I've been talking about. It's not taking something away, it's giving you options and choices. Remember earlier when we talked about counseling? This is what it looks like. It's required for every reverse mortgage, and it's done with an independent HUD approved counselor. This is actually a big improvement in how the program works today, because not only are you being educated by your reverse mortgage advisor, you also have an independent counselor walking you through everything. Their role is to make sure you fully understand how the program works and how it applies to your specific situation. They'll answer your questions, review your options, and help you confirm that this is the right fit. So this isn't something you're expected to figure out on your own. There are multiple layers of guidance built into the process to ensure you have a clear understanding before moving forward. At this point, it's my hope that you now have a clearer picture of how the program works and how it might fit into your financial life. If you choose to explore it further, my team and I are here to guide you, answering your questions and helping you determine what's right for you. No pressure, just clarity, confidence, so you can make informed decisions. My name is Karen Jones, and thank you so much for taking time to learn more about the reverse mortgage program. I'd be happy to help you if you'd like more information about your financial situation. Bye for now. Now that you have a better understanding, it's time to decide, do you want to learn more about your own financial situation? If you do, my team and I would be honored to help educate you even further so you can make another decision about proceeding with the reverse mortgage or not. Remember, a reverse mortgage is not for every family, and that's why you want to explore it to ensure if it's the right program for you. Thank you so much. I look forward to hearing from you. Bye for now.